When the European Central Bank meets again next week, it feels a bit like a family getting ready for a big Christmas dinner. You know there will be stimulating and sometimes controversial conversations, but everyone hopes to avoid any major disputes. And just like gifts under the Christmas tree, the latest round of ECB projections will be awaited with high expectations by all the members. Some will be happier than others, some might even choose to ignore them completely. But let's be honest, for us, the most important gift would be a clear signal from the ECB. A signal on whether the current interest rate hiking cycle is really over. Back in September, Christine Lagarde's message was quite ambiguous. She mentioned that rates had reached a level that, if maintained long enough, would significantly contribute to returning inflation to its target. This was a classic central bank maneuver, hinting that the hiking cycle is over without actually saying it. This keeps all options open, just in case. Since that meeting, a lot has happened. We've seen a continued weakening of the eurozone economy, and more importantly, a significant drop in inflation. Headline inflation fell to just 2.4% in November, which is surprisingly close to the ECB's 2% target. Core inflation also came down to 3.6%. These numbers are much lower than what the ECB had projected back in September. So what does this mean for the upcoming meeting? Well, the new staff projections will definitely show lower inflation forecasts for this year and next. The big question is how much the 2025 forecast will be revised. The September projection had inflation at 2.1% for 2025, which was the main reason to keep the door open for another rate hike. If this forecast is revised down to 2%, the hawks at the ECB will find it much harder to argue for more hikes. As for economic growth, the picture isn't very rosy. The eurozone economy has been stagnating since late last year, and recent data doesn't suggest a strong rebound is coming. So, the growth projections for this year and next will likely be revised downwards. With all this in mind, the ECB will almost certainly keep interest rates unchanged next week. The real debate will be about communication. How will they signal their next steps? Don't expect any clear hints about rate cuts just yet. The ECB will want to wait for more data, especially on wage growth, before even thinking about cutting rates. So, next week's meeting will be all about managing expectations. The ECB will try to sound confident that inflation is moving in the right direction, but they will also emphasize that it's too early to declare victory. Think of it as a cautious but optimistic family update before the holidays. They'll likely signal that the hiking cycle is over, but that any talk of rate cuts is premature. So, while we might not get all the answers we want, we should get a clearer picture of the ECB's thinking as we head into the new year. Thanks for watching, and don't forget to subscribe for more updates.